All right, guys. Good afternoon to all. Again, this presentation is being recorded. Let me turn on my camera so I can be in here with everyone. My name is Brian Seymour. I am the program manager for the Made in Baltimore program. We are a program of the Baltimore Development Corporation, which is our city's economic development agency. The work of Made in Baltimore is aimed at supporting and promoting makers and manufacturers here in Baltimore City and helping to grow the buy local movement in the Baltimore region. We offer business development services and resources for small batch manufacturers, makers, and retailers. We do this through programs like this workshop series. Today, we are joined with Shawn Gunaratne from BDC and Bonnie Crockett from Baltimore Community Lending to discuss where to find money for your business in Baltimore. We ask that everyone please remain muted through this presentation. We would love to see your faces if you are comfortable. This is also a safe learning space, so there's no such thing as a bad question. When you have a question, please quietly add it to the chat and it will be answered during scheduled Q&A segments. Do not feel pressured to keep up with note taking. Again, this workshop is being recorded and will be posted on our website at a later date. Thank you to our parent agency, Baltimore Development Corporation, as well to the sponsors of this amazing series, M&T Bank and PNC Charitable Trust. Thank you so much. And with that, we are going to get started with Shawn.
Excellent. I will share my screen.
Let me know if you have any issues.
Brian, can you see that?
No.
Okay, here we go.
You see it?
Now go ahead and try one time.
No.
Let me stop my screen share. Okay, try one more time.
There we go.
There we go.
Excellent. Well, hello everyone. My name is Shawn Gunaratne. I am the Economic Development Officer for the Baltimore Development Corporation. I basically help to attract businesses to Baltimore City and help them scale when they are in this city. Throughout this presentation, feel free to stop me and ask any questions. Also, Bonnie, I would encourage you to, if I say anything incorrect, please feel free to correct me. Bonnie's the real expert here. I'm her hype man, so I'm just like being the real expert. So whenever you're seeking money in Baltimore, I think there are some questions that you should ask yourself. Everyone, the number one question I get as an economic development officer is, where can I get money for my business? And I always ask them, what is it for? Do you need space? Do you need inventory? Are you trying to hire employees? What stage are you at? Have you made money already? Have you proven your product in the market? Are you growing, or are you just at the idea phase? And what type of capital are you kind of seeking? Is it grants? Is it loans? Do you want to get connected to angel investors? Are you more interested in crowdfunding? And we can kind of talk about who are the lenders in Baltimore City right now doing this type of stuff. So these questions I think are important because there are different types of capital depending on what your needs are. So if you come to me and say, I need space, then I can direct you to a funder that specializes in that. One that comes to mind immediately is the Neighborhood Impact Investment Fund. And I'll kind of run through the lenders as well. So again, kind of what is the money for? First identifying the need for that money, and this will, wow, there's a typo there, determine where you should seek capital. Again, I mentioned space with the Neighborhood Impact Investment Fund. If you're looking to hire more employees, I would recommend the Baltimore Development Corporation, us, because we're very interested in helping businesses grow and hire people. Working capital, I think BCL, the organization that Bonnie represents, is a great resource for that. So I'm going to go through the different types of capital and talk about the pros and cons and give examples of each. But before I do that, I'm going to talk about what stage your business is at. Tamara, did you have a question? I just noticed the screen go to you.
Oh, no.
Perfect. So it's important to identify kind of where your business is at currently. And I've kind of broken it down very simply into pre-revenue and revenue generating. There are further stages and different types of kind of where your business is at, but these are the more general types, and it will kind of help identify which type of lender or grantee to direct you to. So the idea stage, it's kind of when you just have an idea. And I think a lot of entrepreneurs come to us and, I have an idea for this business. Where can I seek money? And I generally direct them, if they're just at the idea stage, to places like Kiva or other crowdfunding platforms. If they're at the seed stage where they've kind of proven their product in the market, there are places like the Latino Economic Development Corporation, which has very small microloans, like 1,000 to 5,000, that can kind of help you out. There's also other organizations like Spread Karma, which can do that as well. If you're interested, if you're kind of past that stage and at the growth stage and you require capital, again, to hire employees or purchase space, I think coming to BDC or BCL. And if you're more at the established business, then traditional banks are kind of the way to go. So the different types of funding. Grants. And please, this isn't comprehensive, but this is just a quick overview of the pros and cons with each of the different types of funding. So grants, obviously, no debt. Everyone loves kind of free money. But the cons are, it's a longer application process. Typically, they come with very specific conditions. So the BDC right now has gotten a lot of money from the federal and state government to give out grants to restaurants and retail organizations. And there are specific kind of uses to how that grant is used. Also, it kind of typically comes in cycles as well. We're not just constantly giving out money. Usually it's a round of grants that each organization has. One of the organizations, if you're interested in grants that kind of go year round, is an organization called Collectively, which I can talk about later on in the presentation, but it's run by a gentleman called Jamie Wooten, and he's done a great job of kind of redirecting capital to businesses here in Baltimore City. Angel investors. So again, some of the pros are you're not necessarily taking on additional debt. And typically when angel investor invests in your organization, company, or business, it typically comes with kind of mentorship and expertise, and then you have access to all of his or her connections as well, which is one of the biggest reasons why people are attracted to angel investors. Some of the cons are you give up ownership or stake of your company. So that can be negotiated, but when an angel investor invests in you, they want to invest and own part of your company. A lot of times it's dependent on your network. So it's hard to kind of get in the door with an angel investor and just get in front of them to make a presentation, unless you know someone or you know of someone. And at the BDC, we kind of try to help make those connections as much as possible. And typically you have to have revenue and sales and have proven your product in the market to a certain extent. And that will also depend on each angel investor. Are there any questions so far, just on the two ones I've covered, grants and angel investors? And Brian, let me know if anyone's in the chat as well. I'm not seeing that, but feel free to stop me if anyone has used the chat. So moving forward, crowdfunding, which I'm sure many of you are familiar, kind of the biggest crowdfunders GoFundMe, but there's a lot of local crowdfunders like Spread Karma, honeycomb credit, that do lower interest rates. Typically, there are no credit requirements. The cons to that is there's a longer timeline to raise money, and it's really dependent on your network already and kind of your marketing and media skills to kind of create that campaign and get that out there. And typically there's a ceiling on how much you can raise. I know, for instance, Kiva, the max is 10 grand, which, you know, might be enough for like the idea and seed stage of the business, but may not be enough if you're trying to purchase a building or other things like that. Loans. I think a lot of people, a lot of entrepreneurs are afraid to take on debt, and rightfully so, for many different reasons. But there can be a lot of pros, especially if you go to the right lender. You can build a relationship with that lender. It increases your credit score, your business credit score, or your own personal credit score if it's paid back on time. Also, once you build that relationship, it might be easier to apply for another loan from the same lender or from a different lender, and you establish a credit history. Other instances is there's a longer payback period. Like for instance, at the Baltimore Development Corporation, we have a 10-year payback period. So as long as you can pay it back in that time, you know, we could potentially offer you a loan. Again, some of the cons are taking on debt, penalties if not paid back on time, you know, risk of your credit score lowering if that's the case. It's very dependent on, you know, consistent revenue of your business, and then the interest rate will vary as well. And I'm sure Bonnie will go into more of this in her presentation too. And just finally, one of the things that we've done is create a capital pathways map. Sorry. And I'll put this in the chat. But basically, we've tried to create a pathway to show where all the different lenders are in Baltimore City. And I'll just show quickly kind of what that looks like right now. Can you see my screen?
We're still seeing the PowerPoint.
Okay.
You have to end share that and then share your browser, I think.
So right now, this is what the pathway looks like. And, you know, depending on where you're at in your business. So say that you're, you know, you've already had some sales. You click on that PowerPoint, or I mean, sorry, that link. And can you see the new revenue generating map?
Mm-hmm.
You can see all the different incubators, crowdfunding, venture capital, fintech,
Yes.
and CDFIs, government tech, and you can click on, like, let's just say you're interested in crowdfunding. You can see kind of all the different crowdfunders that focus on Baltimore City and some of their contact information and just information on credit score and things like that. So this is a work in progress, this map. Feel free to, if you have any questions or comments, I'd love to hear them. But I'll stop sharing now. I'll put the link in the chat and hand it over to Bonnie.
Okay. Just go ahead now.
Go get them, Bonnie.
Okay. Now let's see.
The mission at Lifeprep Early Learning Center is Lifeprep Early Learning Center is to basically.
Ah, that's me doing that. I'm sorry. I'm going to start over. I was trying to move my screen and I kept, I don't know what I was doing there. Hold on.
It's all good.
Good thing we had a tech check, right? Everything worked perfectly then.
Always does.
All right, trying again. We'll do it this way.
The mission at Lifeprep Early Learning Center is to basically provide a physically and emotionally sound and safe environment for our children to thrive in. BCL was very instrumental in allowing even the doors of Lifeprep to open during COVID.
I started my company in 2017, shortly after my release from prison. Baltimore Community Lending allowed me the opportunity to operate and have capital. I have that room and effort to pay my payroll, do materials and things of that nature.
So that was our very first TV commercial. We're excited about that. So hello, I am Bonnie Crockett. I'm the Director of Small Business Lending for Baltimore Community Lending. Baltimore Community Lending, or BCL, is a 501c3 CDFI, a community development financial institution that was actually created as an agency of the city in 1989 to develop affordable housing. And then several years later, they went out on their own, formed a 501c3, and became a U.S. Treasury certified CDFI. A CDFI, or Community Development Financial Institution, is a financial institution or lender that is mission driven, and you have to pass that test to be certified for that designation. So they've been making, real estate development loans for affordable housing and community development construction for over 30 years. And about 4 years ago, they brought on a new CEO and who looked at this and said, if the mission of this company is to transform neighborhoods, you need more than buildings. It's great to have affordable housing and community space and retail space, but if it's empty, if there's no retailers in there, you're still not going to transform the neighborhood. People need products and services. People need jobs. People need entrepreneurial spirit in their neighborhood. So we decided to add a small business lending program. But rather than just go out and start making small business loans, we looked at why do people have trouble getting small business loans? What are the barriers to credit, especially in Baltimore City, which we only work in Baltimore City. So we held about 3 different meetings, in-person meetings back in the day, and had banks and CDFIs and community advocates and small business owners and talked to all of them about, why do you say no? What are the number 1 reasons people are turned down? At the same time, we had the advantage of a comprehensive study done by Calvert Impact Capital called Ours to Own, interviewing small business owners in Baltimore, and a huge study done by Johns Hopkins 21st Century Cities that actually was conducted over a course of a couple of years looking at lending in Baltimore. So we had a lot of statistical data and a lot of anecdotal evidence, and it all came back with the same answers. There is no mystery here. There's a lot of reasons why people can't get small business credit, but the number, including the size of the business. In 2017 alone, 80% of business loans from banks were over $1 million to corporations. Lending to corporations is higher than it's ever been. Lending to small businesses hasn't even caught up to where it was in 2008. Gender, of course, plays a role. Women get about 50% of the business owners in the country and get about 4% of the SBA lending. Race, of course, everybody knows that is also an issue. People of color do not get approval of loans like, white people. And then personal wealth. You pretty much all small business loans require 100% collateral. And that does turn out to be the number 1 barrier, is collateral. In the entire state of Maryland, the people least likely to have collateral are women and people of color in Baltimore City. So that is the number 1 barrier, and they need 100% collateral. So if you need a $50,000 loan or a $100,000 loan, a loan too small for a bank to even consider, you need to own a home. Who has $100,000 worth of collateral if you don't own a home? And folks in Baltimore simply don't have it. So we designed our program around those barriers. As I said, the number 1 reason is it requires collateral. And with borrowers don't have collateral, they use their personal credit, they tank their personal credit by running up credit cards, or worse yet, They get fintech loans online, some of which can be very predatory. We have refinanced a few fintech loans. One, just for an example, was to a restaurant. It was a $120,000 loan, and they were paying 42% interest. 42%. I mean, you never get out from under that. So they came to us, we refinanced the loan. They walked out of the door without owing a dime more than they did when they walked in, because we just refinanced the amount of the debt. And their monthly payments went down by $15,000 a month. So at any rate, this is what people do when they can't get bank credit. But we make loans to folks who have reasonable credit, but just don't have the collateral to get a traditional loan, or face some other barriers to getting a traditional loan. Now, at the same time, we realize that while small business owners, especially startups and young emerging businesses, they may have great ideas. They may be very good at what they do. They make awesome pizza. They design gorgeous shoes, you know, but they don't know how to write a business plan. They don't know how to write financials. They don't know how to analyze financials if they looked at them. And in many cases, they're not sure how to apply for a loan. I mean, just even the terminology, assets, liabilities, that kind of thing is intimidating. They've been told so many times they just stopped asking. So instead of requiring collateral, we mitigate risk by requiring that all of our applicants complete a customized small business training program, a technical assistance program. It is customized. We meet you where you are. I mean, we have some small businesses come to us who are at the starting point and don't know anything. We have others come to us who have full-blown written business plans and financials. That may be a 1-hour meeting. Somebody else may work with us for 3 months. It really depends on the borrower, how much time they put into it, and where they are when they come to us for it. So we have 2 term loan products. Emerging loans that we make to startups or businesses that are less than 2 years old, and growth loans of up to $150,000 that we will make to businesses that have been in business for over 2 years. Most of our growth loan borrowers are successful businesses. They're doing really well, but they can't get capital to take the next step because they don't have collateral. I had a woman who came to us. She had a hair salon. She had a hair salon in Federal Hill. She had 2 chairs, and all day, every day, she turned people away because she only had 2 chairs. She wanted to expand to a larger space and hire more employees. Her business was successful enough to support that, but she did not own her home. So she was just stuck there. She couldn't grow as successful as she was until we made her a loan and she was able to move into a larger space. So these are the 2 products that we have. Our current interest rate is 9.25%. We have a 2% buy down that we got a grant from Bank of America. These rates may sound a little high to you, but typically a CDFI interest rate can run between 6 and 12%. So we're really right in the middle there, and they require collateral and we do not. Nevertheless, we're continuously working on reducing that interest rate by reducing the cost of funds to us. So right now, most of our funds are at 3.5%, 3 to 3.5%. And we're actually starting to see funding come in at a lower rate, pretty much in response to COVID. So hopefully over the next year or so, we're going to be able to significantly reduce our rates because we'll get cheaper money, you know, that we can then turn around. Even at 6.25% above the cost of funds, we need grant funding ourselves to continue to operate, at least at this point, until we've been in business, making small business loans for longer than 3 years. So when we look at your application, we look at the whole picture. You know, we don't have as cut and dry rules like a bank, or actually like a lot of other CDFIs. We're kind of an unusual CDFI in that way. We look at your business plan or your idea, you know, and how good it is. We look at the owner's experience in the field. And if you don't have experience, don't let that stop you. You know, stay creative. We had one applicant who wanted to open a store that sold cooking equipment, and he was going to teach cooking classes. Now, he'd never cooked before in his life and knew absolutely nothing about cooking. So he said, how are you going to do this? Well, I've been a waiter for the last 20 years, which really doesn't teach you much about cooking. But because he had been a waiter in Baltimore, he had some very good relationships with some pretty famous chefs like Spike Jurdy and a few others whose names you might even recognize. So he went to these chefs, told them what he was trying to do, got them all to agree to be an advisory committee. They all signed a commitment letter, said we will be an advisory committee and we'll meet with him every other month during his business. So he got the loan because he came back to us with an advisory committee with significant experience that made up for his own lack of it. So, don't look at things as barriers, look at them as challenges. You can find a way to cope with it, and we'll help you with that. We look at the general economic conditions for the venture. I mean, there was a time that we joked about, not making a loan to a new Blockbuster or video store, but now during the COVID and post-COVID era, you have to look at more than just that. I mean, for example, a new restaurant would have a hard time getting a loan right now since restaurants are struggling. And there are certain industries that are not doing well under COVID, like co-working space, for example, and others that are thriving. We've made more loans during COVID than we did any other time. We look at your credit record. We don't have a cutoff number like most CDFIs and certainly banks. Banks won't even talk to you if you're below a 680. We look at your entire credit report and the score. If you're below 600, if you're in the 500s, we just want to know what happened, why, when we'll look at it. It could be a bankruptcy, which is typically driven by a health issue in this country. It could be a bankruptcy or a health issue or divorce or a job loss, given the crises we've had lately. And we understand that, and we can see in your credit report that that's the problem, as opposed to seeing in a credit report that you took a trip to Mexico and didn't pay your car bill for 6 months as a result. That's a little different story, but we can typically tell, and we work with you depending on what your credit score and your credit record looks like. We look at your cash flow to make sure that you will be able to pay us back. And that includes other sources of income besides your business. If you're a startup and you can start your business while hanging on to a day job, that's great. Then we know that you have a backup source of a fallback position for paying. So we consider all of these things. And we've recently, in the last 6 months, joined a program, or I guess you can call it joined. We're working with a program, a nonprofit called Mission Launch. And they have created a new way of analyzing credit for returning citizens, because certainly anyone that's been in prison for any length of time does not have a good credit score. They will have no activity on it. So they've developed this algorithm that looks at stability, choices, et cetera, to help analyze sort of the character of a returning citizen. And we have started doing that. We have made 2 loans to returning citizens. We have another one in the pipeline. One of them was the fellow in that commercial. In fact, he was our first returning citizen loan. So we're excited about being able to help people that can't get help anywhere else, to be perfectly honest. We don't just make our loans and leave you there. We continue to hold your hand through the process. We require follow-up technical assistance, follow-up site visits. They're not surprises. We schedule them, and we meet with our borrowers 4 times in the first year, twice in the second year, and annually after that, to keep checking on them, help keep them ahead of challenges. And we've developed relationships with these folks. We've had borrowers get in trouble, and instead of avoiding our phone calls, they pick up the phone and call us first. And we've developed a level of trust. They know we're here to help them and work with them, and we have. We've had, at least over the last year, I would say 3 businesses that any other bank would have just written off and put it into collections. But we kept working with them. We kept holding their hand. We kept providing them with additional support, and they all paid off their loans and got caught up and paid off their loans. So we are patient, and we provide a lot of one-on-one support, and it's paying off for our borrowers and for us as well, because in these 3 years of making what the industry considers very high-risk loans, we have had no defaults or charge-offs. We do also ask all of our borrowers to meet with a business banker from an area bank. We'll give you a bunch of names, just to start the conversation. start talking to them now about what you can be doing now to be bankable 5 years from now. Because if you can get a bank loan, it's much tougher to get, but it's going to be more money, significantly lower interest rate. It's just a lot higher, requirements to get in there. But if you're working towards them, then you can eventually, we want to see all of our borrowers move into bank loans and grow at a reasonable rate. So in these 3 years, we have dispersed about $2.4 million. We've made 39 loans to 35 small businesses. 88% of them have been to people of color, 66% to women, and it's about half startups and half existing businesses. And that's where we are now. And we're growing rapidly. I was just telling Shawn this before the seminar started, that in our first year, we made 8 loans. And in the second year, we made 9 loans. And then so far this year, we have made 21 loans. And we're not even at the end of the fiscal year yet. So we are definitely picking up the pace. And then, so finally, just wrapping it up, we really believe that owning a house does not mean you're going to be a good business person. We believe that it's not only more equitable, to require small business training, because anyone can go through small business training, especially if it's free and if it's one-on-one designed around your schedule. There's no reason why someone couldn't go through that, whereas not anyone's going to walk through the door owning a home, especially owning a home with significant equity. So it's not only more equitable, we also think it just makes more sense. I mean, if someone learns how to be a better business person, how to better manage their financials, how to get ahead of challenges, they're going to be better at it than just somebody that owns a house that can cover their debt if they go under. So we think it makes more sense too, because we have a lot of confidence in Baltimore entrepreneurs. So that's my story and I'm sticking to it. And you can call us at any time. Melissa Badaker is mission control. She knows where to send you when you call her and who you need to talk to. And I'll just wrap up by sort of adding to what Shawn said in terms of, why loans. Like I said, with some of these successful businesses, they can't grow without that kind of capital funding. They're successful and they're doing well, but they still need, if they're going to grow in a significant way, they need to borrow the funds. And, consider if you were starting a business and you have, say, $20,000 in your savings account. If you decided not to borrow money and spend all that $20,000, then your savings account is empty and dry, as opposed to you're not going to pay yourself back on a monthly payment and over 5 or 10 years, put that money back in savings. It's just going to be gone. So there's a lot of good reasons to borrow funds. And if you take the time to work out your financial projections, you can figure out if how feasible it is to pay that back, how much you can afford to borrow, and how that's going to help you grow over the years. And we can help you do that. We can help you work that out. And if you come to us and we think that you are bankable and that you could get a loan at a lower rate from a bank, we'll tell you that too. And because we're here to help folks. Again, we're a CDFI, so we're mission driven. And that's it. And I'd be happy to take any questions. I know I kind of speed talked my way through that, but if you have any questions, I'd love to hear them.
Any questions at all, guys?
Yes, actually, I have a question. Earlier, presenter talked about grants being cyclical. In this case, I know we're talking about loans from the BCL, but yet there are still things like classes that had to be taken in some cases in order to qualify for loans. So in that regard, is there any sense that, am I understanding it correctly, that there's no cycle, or there is a cycle when it comes down to applying for loans from BCL?
Oh, no cycle at all. And these are not classes. It is one-on-one. There is someone at the bank who will work with you personally around your schedule, your documents. It's not a class. It's just, we are really looking for the end result. We're looking for a well thought out, clear business plan that sort of covers everything, and financials that are reasonable and make sense. And we can help you put those together. It is not a classroom situation where you have to start at a particular time and end at a particular time.
Great, thank you.
And I will mention, there are other technical assistance and training programs out there, some of which we consider meeting our requirements. For example, if you've gone through the Goldman Sachs 10,000 Small Businesses program, you know, we consider you've done that then. We're not going to send you to technical assistance unless there's something in particular you need help with.
Gotcha. Looks like Carrie, you have a question. Go ahead.
Yeah, thank you very much for this presentation. So I'm a musician in Baltimore, and I actually formed a group that was about to launch in December of 2019. So unfortunately, it was very bad timing right before the pandemic. And my question is about help with feasibility studies and market research, because at this point, the climate for the arts and for funding and lending is completely different than even just a year and a half ago. And I'm wondering if you offer that kind of training to even figure out if the business or the venture that you're interested in forming is even viable, even before you get to the stage of asking for funding. So is that something that you offer, or should I be looking at other organizations for that kind of business training?
We can certainly work with you on that, but typically the people we help are coming to us because they want funding. Okay. If they're an early stage, like you're talking about, just exploratory, we might recommend that they talk to SBDC or SBRC, some other groups that do training. There's also, there's all sorts of ways you could do market research. And one thing we could do for you, we have a membership to IBIS World, which is an organization that does market research for pay.
Mm-hmm.
So we have a subscription, and we could, do a quick report for you to just let you know what their take is on the industry. But in terms of that kind of training, we typically take people from when they're ready to start looking for money.
Okay, great. Thank you.
Mm-hmm.
Thank you so much for that question.
Carrie, I also just want to take a stab at that. I think, yeah, it is a great question, and we get a lot of those inquiries as well at the Baltimore Development Corporation. We don't necessarily do the market research for you, but maybe we could help you think through some of those questions and put you in touch with one person that just immediately came to mind was Maggie, who runs the MICA Accelerator, who I'm sure Bonnie knows. And
yeah.
They might have.
I'm good friends with Maggie, so
okay.
She's definitely somebody I can reach out to. Thank you.
Yeah. So
yeah, it's more that
like that.
Mm-hmm. So for me, I considered for a long time about for-profit versus nonprofit,
right?
And also the question of whether to find a fiscal sponsor if I was going to go the nonprofit route. And there are a lot of considerations that I took into account. And I think that I don't want to go the nonprofit route for the nature of the entity that I want to establish. So that's why I'm looking to small business loans, in particular ones that are catering towards women-owned businesses. Mm-hmm. So very, very excited to hear about your organization, because I hadn't heard about it before. So this is really great.
And we'll have an initial conversation with anyone, even if the end of the conversation is, we recommend you go to SBDC or whatever. We're always happy to, start the ball rolling and have the conversation. But MICA has a good program. I actually teach a small business class there for their graduate program at night.
All right, Kiara, you're up.
Hello, everyone. Thank you very much as well for hosting this. And to sort of piggyback on what Carrie was asking, it's actually similar questions as well. However, I'm currently working with Kathleen with my business plan, and really what we're struggling is the market research as well.
Kathleen Clark?
Yes, ma'am.
Okay.
Yeah, I'm sorry. Yeah, you're like, Kathleen who? But I guess, it's the same. It should.
You can ask her if you want her to pull an IBIS World report, let her know. I don't think she has the authority. She can ask one of our loan officers to do it, and they will.
The IBIS report?
IBIS, yeah.
Okay.
I don't know if she has a login, but I know our loan officers do, and we can definitely do that for you. It's not a problem.
Okay, awesome. Thank you so much.
Wow, thank you for that
Kathleen
question.
is our small business training person. So here you got somebody already in the program.
Does anyone else have any questions?
And
remember,
IBIS spelled as
there's a-
IBIS, by the way, is what I'm saying.
Thank you.
Remember, there's no such thing as a bad question. All right. It seems like we are at the end, guys. Thank you all so much for coming. Thank you, Shawn. Thank you, Bonnie. Thank you to the audience for giving us your time today. Again, this workshop will be available on our website in the coming weeks. And in the meantime, you can head over to madeinbaltimore.org to check out some of our previous workshops. I'm gonna go ahead and give another thank you to our parent agency, Baltimore Development Corporation, and also our amazing sponsors, M&T Bank and PNC Charitable Trust, as well as giving big thank yous to Baltimore Community Lending. So again, if you guys have any lasting questions, go ahead. This is your final opportunity.
Also, I put my contact information in the chat if anyone wants to get in touch.
I should do that too. I'll do that too.
I have a question.
Yes.
Yes. How does one become a trainer to train in the small business classes? Or how does one volunteer? Do you have volunteer opportunities?
We do not have any volunteer opportunities at this time. We are, right now we have Kathleen Clark who is working with us, and we are fundraising to grow this program. Our fiscal year starts July 1, and we want to hire more people starting in July to grow the technical assistance program. When we first started, we didn't do it ourselves. We sent people to SBRC or SBDC, but it's just not practical anymore. They're working at capacity. They can't handle the number of people we're sending their way. Plus, as we get busier and busier, we're sending more and more and more. And we came to a point where, we didn't want to tell our borrowers they had to wait to apply for a loan because they couldn't get an appointment with a technical assistance provider. So we moved it in-house in November and are working with Kathleen. And then over the course of next year, we'll be hiring more folks. So just FYI, that's coming up in the near future. There are also other organizations. You might talk to SBRC or Paul Taylor at the small department of, what is it now? He's in the mayor's office of small women, minority-owned businesses. It's a very long name and I can't ever get it right. Paul Taylor. And he can maybe point you in the right direction in terms of SBRC. There's another organization called Operation Hope. And I don't know, I think they're national, but they have, or regional, but they have a Baltimore office and they may work with volunteer trainers. I don't know, but you can check it out.
Okay. All right. Thank you.
All right, guys. Thank you so much. I hope you all have a great rest of your day.